Hi, good afternoon, partners. Welcome to our NFO series. Today, we are going to cover the upcoming Franklin's multi-asset allocation fund. It's generating a lot of interest and buzz in the market, given the performance of multi-asset funds in recent years. So, we have Mr. Hari with us. He is Vice President and Senior Client Portfolio Manager at Franklin Templeton. He has more than 15 years of experience with the industry, and he will be explaining us the different features of the product and clear our queries. Hi, welcome, Hari. Thank you so much for taking our time to speak to us.
Hi, great to be with you.
Thank you so much. Would you like to mention why any specific reason for launching a product like multi-asset at the current juncture?
Yes, so the Franklin India Multi-Asset Allocation Fund, NFO, is live, and really here's why you should look at it. We are living in an uncertain and volatile world in terms of the volatility which we have seen in the world as we stand today. I think it makes the launch of this NFO pretty timely. We are looking at a world where we have seen wars, you've seen geopolitical wars, you've seen trade wars, you have all the volatility which comes with these scenarios. Then in India, we've been through a fairly volatile period as well. You've seen a period where the markets have fallen by the 20%, only to recover almost all of those as well. So at the same time, right now, earnings are slightly slow, but valuations have moved up. It makes sense to look at multi-asset solutions in this context. And so I think the launch of this NFO is very timely and very relevant for our times.
Absolutely. I think makes sense, especially given the current geopolitical context. Sure. So, within the multi-asset category, we've seen a slew of launches over the last 2, 3 years. In fact, the number of schemes has doubled since 2022, right? And so, any differentiation which Franklin is targeting to differentiate its MAF strategy from the others in the industry?
Sure. So firstly, Franklin Templeton has the expertise of running multi-asset solutions across the world. So internationally, we have been running multi-asset funds for decades. We have many billions of dollars of assets in multi-asset solutions. So for us, it was really about bringing that global expertise to the Indian markets. That's really what we are looking to do here. So for that, we have created a unique proprietary model, which and I'll be happy to share a few details about. So if we look at what the fund is about, we are looking at a universe which is well known, I think, to many of our partners, the equity, debt, and commodities. But what we are looking to do is really introduce this multi-factor proprietary model. Now, this is, as I said, based on a lot of research which we have done over the last, last months, years. Actually, it's been in the making. We have had to look at data across different parameters over 19, 20 years and found out, what are the relationships which make sense in the macro side. Plus, of course, you always have the qualitative inputs from the portfolio managers. So together, I think that is really what the model will end up looking like, with an equity range of about, let's say, 65 to 80%, but that is only at the gross level. So we've got commodities, we've got fixed income. Even within commodities, I'd like to showcase some of the work which we have done in terms of looking at the range of commodities which are available and what really works for us. So we have been able to find that, for example, copper makes a lot of sense, but energy, not so much. Crude oil, some you can think about having it in a multi-asset fund, but we found that doesn't really make too much sense. So I think that it's been, of course, precious metals will be a part of the commodities basket. So I think it's about really all the work that's gone into understanding what are the various parts which will contribute to the returns of such a multi-asset allocation fund.
Sure, sure, sure. That gives a good amount of perspective to our partners on what they can expect from Franklin's new strategy in multi assets. If we have to deep dive a bit deeper into this, what do you think will be the neutral allocation for equities and commodities?
Well, so firstly, what we need to note is our strategy in terms of rebalancing. So I spoke about the multi-factor proprietary model. What's interesting to note in that is that it is based on trying to be as real time as we can possibly get. So decisions on asset allocation will be taken on a monthly basis. It's not going to be very static. It's also not going to be one of those. There are some, I think, which are more static in nature. So you've got like a 50, 30, 20. That's one way in which you can run a multi-asset model and then just rebalance around that. Instead, what we are trying to do with our model is to take actual calls on what the optimal asset allocation should be for the times which we are in. So, for example, if you look at the range of asset allocation, it says here 65 to 80%, but I will clarify a bit of that. So, equity net equity will be actually around 30 to 80%. So this is a very wide range if you think about it. And we will look to our models at least capture the entire range. We have certain times when it strongly recommends being at 30. At some points, it strongly recommends being at 80%. So we are looking to be very dynamic about our calls on this and fairly decisive, therefore, in terms of which kind of a universe we find ourselves in. So on net equity, 30 to 80%. In terms of the next one, which is the equity arbitrage, therefore you've got 65% at least, so 0 to 35%. Debt will be actively managed, will be an actively managed debt profile. 10 to 25% based on the regime. And finally, commodities, which is always interesting, bullions and industrial metals of 10 to 25%. So bullions, just to be clear, precious metals, gold and silver, and industrial metals, among which copper looks very interesting to us. We think that that is a metal which during specific times, specific regimes, it definitely kicks in as a very good contributor return. Unfortunately, recently we have seen that copper prices have moved up pretty sharply because of certain actions being taken on the tariff side. Correct. But nevertheless, it is one of those which seems to be a metal which contributes, which we can add tactically.
Oh, that's interesting. Because from the list of already available schemes in the market in MAAF, I think only a handful of them actually have the mandate to be able to invest apart from gold and silver. So I think that is one kind of a differentiation which we have. So and within the commodities, any preference between gold and silver? Because some AMCs, in fact, a lot of them have gold which is higher than silver, and a few of them have started having silver higher than gold. So any call on what Franklin is thinking for this strategy?
We are looking to maintain a bit of a balance between the two.
Okay.
That is the general approach. Of course, there will be certain times when it may make sense to have a bit more gold or a bit more silver, as the case may be. But generally, we are looking to include both gold and silver in the mix. I think we had seen that silver had become relatively a lot cheaper compared to that of gold. So at that point of time, it would have made sense to add more silver to the portfolio compared to gold. Having said that, going forward, we still see that and that could still continue. There's nothing to be said that silver has become absolutely more expensive than gold compared to historical relations. But broadly, if you're looking at a longer term picture, we look to maintain a balance between the two.
Sure. I think that makes sense, considering both have been rallying over the last couple of years, right? Okay. And if you look at equity, any specific style of investing, like within either style bias, it can be quality, momentum, or value, or do you have any market cap bias between large, mid, or small?
Yeah, so I think for us, on the equity side, we have had a we have had long-term approach to investing in the equity space. Uh, we have a full suite of equity funds. We are looking to manage it along those lines. It will be across market caps. We are looking at ensuring that we have large, mid, and small caps in a flexi kind of a configuration.
Okay.
So the aim of equities is to be able to contribute to growth, right? So I think the idea is that you should be able to participate in all the caps, in all the large cap, mid cap, small cap, depending on what your views on the markets are. So
Right.
of course, I think if certain parts of the markets become overheated, then we can skew the other way. And definitely, I think if you're taking a more conservative approach to equities, for example, so we're looking at 30% allocation to equities, then we will, of course, have to cut our small and mid caps accordingly as well. So I think the approach will be what we have come to depend or expect from Franklin Templeton for a long period of time, which is a long-term approach, reliance on the institutional processes, bottom-up quality orientation, growth at a reasonable price. All these are going to remain constant. It's what Franklin Templeton funds have delivered over more than 30 years. We are bringing that entire philosophy for the equity sleeve here as well.
Great, great, understood. So it will be mostly a flexi sort of an approach. But primarily, can we expect that large cap will be forming majority part of the portfolio, considering most of the schemes in the market, prefer large cap because a lot of target investors for category like MAAF, which is a hybrid, rely on regular sources of withdrawals via SWP. So can we assume that large cap will be at least 50% of the equity portfolio?
I think that's a fair assumption to make. Flexi caps itself, the categories tend to be along those
Exactly.
lines. I think it's about 70, 20, 10 in that's what the benchmark, if I were to put it that way. The Nifty 500, which is the benchmark for the flexi caps, tends to be 70, 20, 10 broadly in terms
Yeah.
of large, mid, and small. So around that, I think can be expected in terms of large, mid, and small cap as well.
Great. Perfect. Great. That gives a lot of comfort to our investors because once they have some idea of asset allocation, they can do the right schemes in which aligns with the asset allocation of different investors. So the clarity on the same is definitely going to be helpful to our partners. One more question I think we have received from our partners is that a lot of like we have some AMCs in the industry who position their balance advantage fund as more conservative than multi-asset fund. But there are also a few AMCs who position balance advantage fund more aggressively on the risk return matrix vis-a-vis the MAF. So at Franklin, considering we already have our balance advantage fund, do you think this will be positioned higher on the risk return matrix or lower?
I'd say they're just slightly different in terms of their approaches, right?
Yeah.
So the balance advantage fund is more steady in its asset allocation, if I may put it that way. So there also the decisions on asset allocation are made on a monthly basis. But the allocations tend to be a bit more incremental on a month-on-month basis. So for example, maybe 3 months back, we were at about 52, 53% on the net equity for the balanced advantage fund.
Yeah.
Today, that is down to about 46.5% based on how the markets have rallied. Markets, if they move up further, the model which we're following there will recommend further cutting for the balanced advantage fund. So it's
Yeah.
a fairly steady decline to the asset allocations. We should expect that the multi-asset allocation will be more decisive in its asset allocation.
Okay.
So we will look to make sharper cuts or additions to the asset allocation, um, given that given the way the model has been set up to run. Generally, what this will mean is that in terms of return expectations, maybe I'm not sure how the
Yeah.
returns will play out eventually, but I think this is just in terms of the approach. This is the contrast which we can draw between the two.
Sorry, can you please come in? Approach with?
approach between multi-asset and balanced advantage. So balanced advantage, the asset allocation calls will be more cut. It'll be a more contrarian approach. So as the markets move
Okay,
up, this will definitely
understood.
cut
Compared to
immediately.
multi-asset.
Multi-asset
Okay,
you may have a situation where multi-asset holds its asset allocation for longer at a high equity level and cuts
okay,
more sharply closer to the
understood.
inflection points in the market. So this is a different approach compared to that of balanced advantage fund.
Oh,
So
great.
balance will be maybe more steady in its return profile. This may be sharper in its return profile.
Oh, so actually, so this is actually a quite an interesting approach, because what we've seen in the industry is that most of the AMCs, the balanced advantage fund is quite dynamic in terms of
Okay,
the equity approach.
right.
And multi-asset, so we've analyzed data for net equity for across over more than 5 years, because only then we have the right data. Prior to that, there were no real true to level multi-asset funds. Most of them have come in the
True.
market last 5 years. So this can be, I think, your unique because having dynamic calls within multi-asset is relatively new in the market. So I think
Right.
this can be an interesting scheme to watch out.
Definitely.
Yeah, sure. Sure. Thank you so much, Hari. I think you helped our partners to get a glimpse of what to expect from the scheme, and we hope and wish that the scheme, gets a maximum participation from our partners and investors, and wish you all the best.
Thank you. We look forward to participation from you and your partners. Thank you for organizing this video as well.
Thank you so much. Thank you.
Thank you.